Yeah, I think times of change, times of crisis, they always bring opportunities, not only risks. And I think two things are central for us in Europe at this point in time when we're talking about financial industry, financial markets. One is maintain the stability and resilience that we have, maintain strong independent institutions, a strong rule of law and responsive, strong supervision. Trust and stability is everything in financial services. At the same time, if we can reduce the complexity that there is around doing business in Europe in the financial sector, we can make it not only relatively but also in absolute terms a more attractive place to do business, and there will be opportunities.
We're talking relative to the states, I assume, when you say we can be more attractive in relative terms, right?
Well, I think in times when political cards are getting shuffled on a daily basis, people then look at their alternatives and they look at what's relatively the most attractive place to do business and where are they going to meet with stability, with a clear rule of law, with strong institutions, and I think if we can change some of the growth of complexity into a rationalized regulatory environment, then we would have an extremely good package. But in order to get there, we have to change the way of thinking to some degree.
And how is the process going? There were reports that there's a new task force within the ECB as well to reduce complexity, to make Europe actually more attractive, also from a regulatory standpoint. So what's the latest here?
I think at all levels, there's been a realization that the density of rulemaking has grown to a level which has begun to become counterproductive, right? So everybody is looking at this in their for their own institutions, for their own markets, and saying, what can we do? And I think obviously this starts with European rule setting. It also touches national legislation. But we as supervisors also have to look at our practice. We made our supervisory practice in banking much more proportional last year and rolled out some simplifications which touch 950 bank institutions that make their risk management on a daily basis somewhat easier. So we all have to also look in the mirror and say not just what should the others do better, but what can we do better.
And so what's the feedback from your European colleagues? Is Europe getting its act together in that respect and reduce complexity?
I think it will come. But it's much easier to say we want to reduce bureaucracy than it is actually to do it. Every rule had a reason. Every rule has its adherents that are somewhat wedded to that way of doing things. So there's a lot of resistance that you need to break through, which is only human. But I think what we've said today is that, for example, on some of the ways of managing climate risks, we don't need the same granularity for small institutions in Germany as for big ones. So we're only going to adopt for part of our industry the new guidelines on that. Not because we think climate risk is less important. The climate challenges are actually getting bigger and not smaller, but because we don't think we'll win the battle against climate change with reports from small banks. So it's a question about getting focused on the major risks in the major institutions and not trying to solve every problem with a new rule. So it's partly a philosophy and partly this determination to roll back some of the things where you can say, actually, we don't need that as supervisors. We need to keep the same level of stringency and security in the system, but that we don't need to reach our goals.
Yeah. Let me bring you back to recent market developments. It was quite a roller coaster since the onstart of the Trump administration. And clearly the dollar weakness is potentially putting strain on the system. So are you going to test for dollar weakness as well, or is that a concern for you?
I think one of the things we're looking at more is currency mismatches in balance sheets of larger institutions, because we've seen some rethinking of markets as to what is quality and what is a safe asset. I mean, this turbulence that we experienced a few weeks ago, a kind of orderly chaos where markets functioned, but they functioned very differently to turbulent times in the past. There was a widening of spreads in 10 and 30 years treasuries, which we've never seen in these crisis periods in the past, and a rotation into shorter maturities. So what does it mean if there's a little bit of a rethinking about this dominant role and stability guaranteeing role of parts of the US system? We need to look at that and the way balance sheets are made up.
We clearly here talk about treasuries. I mean, there's a huge risk as well that Chinese are going to dump them, and they are a big holder of them. So how much of a threat is that in your thinking to the financial stability also here in Europe when it comes to that sell-off of treasuries?
Yeah, I mean, treasuries are a big part of asset holdings throughout the financial system. I mean, I don't want to speculate about future scenarios. The markets are calmer now than they were. Some of the developments have rolled back, as some of the political decisions have rolled back. But we do need to think about some of these scenarios in maybe a different way than in the past. But there's no short-term decoupling to be had from the US capital markets. We're in a situation where the dollar and US capital markets are very dominant. But asking that question, how dependent, in what way do we want to be dependent, and how can we reduce some of those dependencies, is something that I think every financial institution is looking at the moment.
Yeah, that brings me directly to that whole topic of European sovereignty also when it comes to financial markets. So being in the markets for quite some time, that actually strikes me as an illusion, to be able to really be completely independent from the states. What's your assessment?
Well, in the short term, it's an illusion.
Yeah.
Of course, long term, you can do anything, but you've got to think about the costs. Globalized financial markets have brought an efficiency in capital allocation and in the end, a pricing of financial services, which is very positive for global economies and clients. You can roll everything back if you want over a period of time, but you've got to realize that every fragmentation that we've seen over past years, some of them politically desired, like Brexit, for example, but every fragmentation makes doing business more costly. And that would be the same in financial services. If you compartmentalize it, it'll make everything less efficient and more costly. So it would be great if we could find a way to retain the benefits of global markets and deal with the risks of new situations. I think Europe benefits from being an open and internationally oriented financial market. We should try and preserve that, but not be naive about what scenarios could develop.
Yeah, one of the, perhaps effects from these global turbulences and also the erratic policy approach in the States is that European banks seem to benefit, at least if you listen to the last earnings seasons and the CEOs, they were all saying they get more interest. Is that something you are monitoring as well?
Well, I think, as I said, in turbulent times, people think about things that have been, the received wisdom for a long time, and think, well, would we choose to balance our activities a bit differently? And I think if Europe can, develop its financial and capital markets and become, even more attractive and decrease the regulatory burden where it's not needed, then you'll see more of that. You'll see that this relative attractiveness increasing, and you'll see you can see a chance for Europe. And obviously there are scenarios which could develop negatively, and we always, as a supervisor, have to have our eyes on them. But we shouldn't, take our eyes off the fact that there are chances if we regulate smart and stay extremely stable.
We're in Germany. We have a brand new government. So what are your hopes pinned on that apparently more pro-business friendly government?
I don't think it's about pro-business or not pro-business. It's about navigating us through difficult waters, but also when it comes to the financial markets, supporting this European drive for stability but less burden and less bureaucracy. I think that is written, very clearly in the coalition agreement of the new government that on a national basis we want to reduce the cost of doing business and bureaucracy, but not make any compromises on stability. That's the best combination. I think we're looking forward very much to working with the new government as well as we have with previous administrations.